Let's go over to Ledgerland. Let's talk about the hardware wallet company raising $109 million, according to a new report from Bloomberg. Hardware wallets have been in vogue once again, not really because people like them or think they're shiny, but because FTX exploded and people are wondering, oh, where is my crypto after all? I probably want to keep it on myself because, yes, you can do that with crypto. It's pretty cool, and I highly encourage it. Adam, let's throw the story over to you. Really, I think this just... the money speaks to where people are moving, right? People don't want to keep their digital assets on exchanges anymore. They want to take them to self-custody. And that's what I see with this headline.
Yeah, it's like that. It's like that shirt that's like, look at the front of the shirt, then the front of the shirt tells you to look at the back of the shirt. That's basically the thing that we see over and over again here, right? Like, it's not like there's a safe way to store cryptocurrency, right? Either you're dealing with counterparty risk on one side, or you're dealing with personal custodying risk on the other side. The kind of catchphrase has long been, be your own bank. And that's true, but the downside about it that often goes unspoken is that being your own bank is actually a little bit difficult. And there's a lot of responsibility that we're used to offloading to banks that you kind of have to bear here. So it's a long way of saying that this seems like it makes perfect sense. Again, like with all the collapses of last year, with all of the sudden awareness and intense sort of feeling of what happens when you let counterparty risk really kind of take a big position in your portfolio, it absolutely makes sense that a company like this would be able to go and raise a significant amount of money. And this is a significant amount of money, $100 million, $109 million. Like, that's real money during any time, and it's especially real money during a market like this. It's also worth noting that Ledger itself is one of sort of the older players in the space when it comes to this particular game. I believe back in the early days, it was Trezor, and then it was Ledger, and then we had some come out after that. And it's really Trezor and Ledger, Lab of Satoshi, that have kind of stuck around. So this seems consistent with kind of the mood of the day. But yeah, always good to remind people that it's not a panacea to use this type of technology, and it all requires significant work. Jen?
Yeah, after the collapse of FTX, I think it was the Sunday after, I stand to be corrected, I think the stat was there was the highest single day signups for Ledger wallets as people realized that actually crypto exchanges don't have my crypto as safe as I thought they did. $109 million is crazy. And I want to point to this quote. I laughed, so I kind of chuckled when I read this in the story. Ledger CEO Pascal Gauthier told Bloomberg, suddenly people were like, wow, to leave crypto on an exchange is actually dangerous. Then he said, and 2023 is even better for us because now you can't even leave money at a Swiss bank. What a quote. I'm curious to see what they're going to do with that $109 million. Like you said, Adam, being your own bank is not easy. There's a lot of responsibility you take in holding your own assets. And so I'm curious to see how they put this $109 million to work. If they're able to solve some of these complications for people, make it a little bit easier for you to be your own bank. At ETH Denver, there was a lot of talk about account abstraction, abstracting away all of these barriers and pain points and looking at different ways to recover your assets, not just 24-word seed phrases. So I'm curious to see. I'm still waiting for that stackable wallet, Ledger, and I hope that you send us some. Will.
Are you talking about like the iPad wallet or whatever they showed?
Remember those stackable? Yeah.
Yeah, very cool, very sleek. I hope they do that. Like, I think their designer was actually the one who invented the iPod or invented the design for the iPod. So hopefully we get some of that. And that's maybe where all the money is going. Hardware is really expensive. According to this article and according to Bloomberg sources, it does look like they might even do some further rounds. It's at the bottom of the article there. You can see that they're looking at a second and a third round to close. The one thing I do want to point out here is the valuation. It's roughly steady with the $1.4 billion valuation that they had in June of 2021, which is a very different market than we are seeing right now. And that's just sort of an interesting side note or side quest we can go on here, just talking about valuations and why would a hardware wallet continue to have a good valuation when we've seen most other companies in the space drop their valuations by upwards of 70% in many cases. A lot of these projects have just outright failed or sputtered, but the hardware wallets, they're sticking around. So, maybe the boring stuff, as Adam likes to put it, is really where you should invest your money. I'll throw it over to you for that thought.
Yeah, I don't know if that's where you should invest your money, but I mean, again,
Financial advice.
People take money because money is available to them, right? And companies raise at valuations because that's what investors are willing to give them money at. And so again, like the narrative right now, I think is very much in favor of these types of plays. Personally, with the money, I would like to see a focus on again improving some of the hardware experience. When people talk about account abstraction, most of the time they're talking about using centralized intermediaries as a way to abstract the need for you to remember things like your seed phrase and stuff like that. But there are like entire like message signing workflows that could power like entire systems that we haven't really seen. We've seen some kind of nascent efforts around them yet, but we haven't really seen them kind of roll out yet. So I have some hopes that we'll get some more innovation coming out of these funds and others. And again, like it's a space that really could benefit from, if anybody's going to solve the how do you have people hold their own stuff without it being like a dangerous miasma, of problems, like they have the best chance of solving that. So I hope to see that.